Third world. That's where we're going. Get ready for $7,000 gold followed by $18,000 gold.
This video is brought to you by Reluctant Preppers. Click here to subscribe for free to reluctantpreppers.com. Hey everyone, this is Elijah Johnson with financeandliberty.com, and back with us today is Jim Willie, editor of The Hattrick Letter, found on goldenjackass.com. Thank you so much for joining us today, Jim.
Oh, good to be back. A little follow-up. We had some things we didn't complete, and I think we've got maybe a couple of extra items that came to mind that are, I think, really good. But you wanted to mention something about the silver coins. I mean, gosh, isn't it amazing that it's under a $16 corrupted COMEX price, and you got to wonder how much supply is available down here, huh?
Right. I mean, we just heard from Reuters reported that the U.S. Mint has actually currently sold out of silver eagles because of quote-unquote tremendous demand recently. So I guess my question to you is, if we're seeing so much demand for silver, why is the silver price falling?
Well, because there are two prices. One is the corrupted COMEX price that really doesn't deliver any silver. I don't know if people are aware, but they really need to understand this extremely important point. For gold and silver futures contracts, there has been no delivery on those contracts of gold and silver metal since May and June of 2012. These are corrupted contracts that no longer deliver metal. They're devices exclusively to control the price. They are corrupt to the core. This will not stand much longer. And I made a forecast a couple of years ago. I said during the end stage, you're going to get a divergence between the paper gold price and the physical gold price. And that is now becoming more and more evident as we see the Shanghai operations take root and a lot of trading volume take place. I got a message from my main contact, The Voice. He's a gold broker among many other roles. And he tells me that it's quite frequent now, especially Asia and the Persian Gulf, which they prefer to call the Gulf region now, because the whole name of Persia is weird in there. The Gulf region and Asia are now paying routinely 30 to 35% price premium on large purchases. And when I tried to get some details on that, I said, wait a minute, you're not talking about retail level where someone wants to buy 18 coins. He said, no, I'm talking about people who want to purchase 20, 30, or $50 million worth of gold bullion. They're paying a 30 to 35% minimum premium over the spot price. So figure 1,400 to 1,500 minimum is what they're paying. And the challenge that he describes is that there's not much available. So they clean out one major vault, then they go to a different market and clean out that major vault. They're running out of vaults, he said. So the conclusion that people need to understand is that the COMEX is not a gold and silver market. The COMEX is a corrupt paper shenanigan, bullshit market that tries to control and will not succeed much longer in controlling the physical market. We've got an unusual situation right now where supply and demand is nowhere near in equilibrium. When they sell out of these U.S. Mint silver eagles, what they're really saying is the price is wrong. You don't sell out at a correct price. What you do is you say, well, just a minute, we've got some more people lined up willing to sell at a slightly higher price They've been waiting for that nudge to a higher price. And there are even more people at a little bit higher than that price. That's called a market. There's no supply and demand equilibrium anymore. You've got two markets: the paper bullshit, corrupt market that does not deliver in metal, therefore is not a market, versus the physical market that does deliver and requires a significant price premium to get the transactions completed. We're in the end game, and things are really beginning to explode and break wide open.
Definitely. And you mentioned that a lot of vaults are being emptied. And in your recent article that we discussed a lot about in our previous episode, you discussed how the GLD is also being drained. Gold is being drained from that fund. So did you want to discuss a little bit about what is happening to all that physical gold?
Yes, it's a corrupt device set up in a very clever manner by the big banks in New York and London. I could go on for hours about GLD, but some of the main points, we've discussed this in the past, but some of the main points here are that the GLD shares, which trade at 1/10 the official COMEX gold price, they're being shorted by the big banks. So let's just say JP Morgan wants to short a bunch of shares. I don't want to get into actual numbers. They want to short a small truckload of shares. And they do so, and then they go to the vaults that hold the GLD fund. It's also known as the SPDR Gold Trust. So they take all these shares and they say, we're short and we're an official player, so we want all this metal associated with these shares. And no one gets in their way because they're a big bank. Now read closely the prospectus, and it says that any legitimate shareholder can do the same thing if they meet a certain threshold of shares. And I don't know exactly what it is. I think it's something like 10,000 shares. But all those people who are not bankers are being rejected, a violation of the prospectus, a violation of the fund and its operation. So what's happening is the big banks are using the GLD fund to meet delivery requirements for Shanghai, because they don't have to meet delivery requirements in New York and London anymore. They don't deliver gold, as I just explained. They're using the GLD fund to send to Shanghai, to send to Dubai in the United Arab Emirates, to satisfy demand. So there's no default in Asia and the Gulf region. That this is extraordinary what's happening. But the gold game, the great gold game, is going to end when China can no longer access Western gold. There are two main suppliers that I am aware of that are in the open, and this is a very important point, in the open, visible, and they are the GLD Fund and Scotia Mocatta, sorry. It's M-O-C-A, Scotia Mocatta. Scotia Mocatta has been, making themselves available. We'll get to that in a minute. But the fund is also supplied by the mining firms and their output. And notice a couple of extremely big events that occurred in the last year or more. Pascua Lama has been in the news. It's a very large, so far, Barrick had invested $8 to $9 billion in multiple years to develop this remote site on the Chile-Argentina border. It's in a slightly mountainous region, very remote, big cities nearby, no electricity plants nearby, no roads. So they had to develop all this. Well, suddenly, about a year ago, Pascua Lama got shut down. The Chilean government basically said, we don't want you to take the gold out of there anymore. We regard it as too important for our future as a nation. So maybe there were some violations of contract by the Chilean government and Chilean business entities, but no matter, governments can do what they want, as the U.S. proves time and time again. They do whatever they want, whether it's criminal or not. So Barrick lost big output flow that would have gone to the COMEX. I mean, I believe the output flow was to begin this year, so maybe not quite this year, but anyway, the GLD has been hampered. The other big event was in Utah with a huge mudslide, landslide that covered, they said 1 million tons of earth. Think of 30 stories downward, this inverted bowl with layer after layer of little roads that go in a serpentine fashion so the trucks can go up and up and up and up. Well, they're digging down below. Anyway, it all filled in and wrecked the Kennecott property. Again, more output that would not reach the GLD fund. I've been making a point for quite a while that GLD is actually a very clever device. It not only has its vaulted amounts of gold, but it has, in addition, what we call gold in motion. Now, if you've got mine output from Barrick or from Newmont or from Royal or from Goldcorp, these major companies, they have output. Well, they're on trucks. They're in delivery, in process of delivery. They're going to the refineries. They're in process. So in this entire process, think of them as being in motion. They're not in the mine anymore, and they're not in the market yet. They're in motion. So a lot of the gold that you see for GLD in their official numbers is really not in the vault. It's in motion. And we've got my group and I don't know what we call ourselves. We call it a brain trust. We call it the colleagues. We call it our group. But we got a couple guys in here who are really smart. One of them's an ex-London banker, and he did a lot of this kind of analysis. And he said, Jim, I think rock bottom zero for the GLD fund could be 700 tons. It could be 600 tons. There's no exact figure. But he said, I believe rock bottom zero is not much farther down from where we are exactly now. So some big things are happening. And the last thing to mention regarding the COMEX is First Majestic just announced that they are withholding their third quarter output, holding back a good part of it. They're holding back 900,000 ounces of silver. They said, we're going to put it in inventory. We're not going to supply it to the market. So these are all contributing factors, Elijah, for shortages and exposing the COMEX as being a gigantic, colossal, world-class corrupt arena.
Now, you also mentioned in your article that Scotia Makata is being drained of their gold as well. You said, quote, the great gold game cannot be continued in perpetuity, since the paper gold requires an inflow source of actual precious metal gold in the form of gold bullion, end quote. So could you describe a little bit about the sources of this gold bullion being drained?
Yeah, Scotia Makata is unique. It's the big Canadian bullion dealer, bullion bank and dealer. They used to be tip-top in integrity. They used to be, unassailable. They are world-class. They are, AAA. You could never insult them for their integrity. That all changed a year ago. They let it be known that they were going to supply Wall Street. I don't know what kind of deal they made. I joked that they made a deal with the devil and, maybe some kind of satanic rites. I don't know. I don't know. Maybe they've got special treatment where Toronto will not receive terrorist events by our Langley boys. Whoever gets in the way suddenly has terrorist events, and the Islamic terrorists show up. It's the invisible gang. It's a bunch of BS and nonsense. But bear in mind, Canada is not better than the United States when it comes to banking and finance. They're not clean. They sold out all their gold. Their Canadian dollar is backed by nothing. They have a long-standing, scummy, corrupt relationship with Wall Street banks. Barrick is their biggest gold mining firm, and it used to have President Bush, Papa Bush, on its executive board. They had two boards, an operating board and an executive board. Mulroney and Bush were on the executive board. That's where they set up all the gold suppression evergreen contracts. No, Canada's not clean. Canada dumped all their gold, and they even got victimized at the Royal Mint from fake gold sent from the Clinton and Rubin administration with the help of Papa Bush. These guys are master trillion-dollar criminals. It's true, the gold suppression requires a basis, and Scotia Makata has been providing that basis. If you look at the weekly reports of movement by the COMEX. I did this, with real close magnifying glass a year ago. You would see it went from Scotia to Bank of America, went from Scotia to Citibank, went from Scotia to JP Morgan. It went from the other three to each other, not including Scotia. So Scotia was clearly the source, and after it left the source, it moved around among those three banks, Bank of America, Citi, and JP Morgan. Goldman Sachs was also in there, four banks. So they're going to drain Scotia Makata. It's happening, and I don't know how much more they have left. It could be that Scotia Makata is the conduit from other sources. But back to the point, there are over 100 ounces of paper gold that are made as claim per 1 ounce of actual physical gold metal. And that ratio is getting worse. It was not 100 to 1 2 years ago. I believe it's considerably over 100 to 1 right now and getting higher. So, this is it's going to break. It's going to break, and I don't know how, I don't know where, and I don't know when, but it's not going to be a few years from now. It's going to be probably several months or a few months from now.
Now, moving forward here, in the past you've often mentioned Shanghai as final competition. So how do you see this unfolding?
China will continue to hold Uncle Sam upright. I don't know if people remember a very funny movie, John Silverman, and oh gosh, I can't remember the other, Andrew McCarthy. It was a movie called Weekend at Bernie's. And it's not a good title because what it was about is this Bernie was the boss, and he was in charge of a lot of different things, but he died. So they pretended that Bernie was alive, and they propped him up in order to continue to make, corrupted decisions. They were fraudulent decisions, and they just led people to believe, well, Bernie's still fine. He's busy right now. Okay, what we've got now with the U.S. dollar is a bankruptcy situation for the entire U.S. dollar network and system. I believe, I would say better than 50-50 chance right now, we have the U.S. government in a debt default situation that's gone on now for several months. What I'm saying is the U.S. government has already defaulted, more than likely, more than 50-50 chance, on its government debt, on its treasury debt, already defaulted. And part of the default involved JP Morgan losing its headquarters to a Chinese property conglomerate. There are also very strong indications that the U.S. Fed, otherwise known as the Federal Reserve, has a majority stakeholder now in China. JP Morgan has lost its role. So I believe that we are in some very dangerous waters here where Shanghai is the new big financial center emerging from the entire Asian continent, in particular East Asian, the Pacific coast of Asia. I believe the U.S. government has defaulted. I believe the Fed has changed hands. Long ago, the International Monetary Fund changed controlling interest. The big contributors are no longer the U.S. government. They have not made any contribution in 2 years. China has, and I think China controls it. So Weekend at Bernie's is relevant because what the Chinese are doing is keeping the system propped without notification or news of the default taking place for the U.S. government debt. That way, the U.S. government maintains its interest rate swap derivatives to produce the only major sized buyers. It's all phony demand from derivatives. It requires the free money. That's why you'll never see a change to the 0%. The free money comes in, goes through a couple processes, a coupon swap versus other swap, and before you know it, the short-term swap versus the long-term swap, and out comes the other end, demand for a treasury bond. This is a requirement by China to keep Bernie propped up. So the US government treasury debt is maintained as a market by the phony demand created and fabricated from interest rate derivatives, requiring the free 0% money as input. They keep it going so that the Chinese can redeem their treasury bonds held in reserves. The Chinese, if they have taken control, do not want to see a 30% and 60%, write down in their treasury holdings. They want 100% redemption when they're buying up buildings and property, commercial property in Los Angeles, in Dallas, in San Francisco, in Seattle, in Detroit, in Chicago, in Cleveland, in Boston, in Miami, in Philadelphia, in Baltimore, in Washington, in St. Louis, in Denver. You get my drift. They're converting their treasury bonds to hard assets. In Africa, they're converting them into mining properties, into oil deposits. They're converting it into large petrochemical plants in Saudi Arabia. They're converting their treasuries into large projects in Iran. So the Chinese will keep this game going as long as they can continue to convert their treasury bonds. And the other side is they're going to continue the game as long as they can continue to obtain gold. So that's why these shortages of GLD, shortages of the COMEX vaults, shortages with the US Mint, all these different shortages for gold and silver are very important, because when China can no longer have its agents in London and New York pull all that supply and send it to Shanghai to satisfy the demand, when that channel or series of channels is halted, then China's going to say, all right, we're done. We're done. We're going to change the gold price. We're going to double the gold price in order to attract more supply. We're tired of your game. We appreciate your cooperation in providing us all this gold for under $1,500 per ounce of the last 3 years. We really appreciate your cooperation in providing all this gold for well under its value. We really appreciate the drainage of Western gold. We really appreciate all of your accumulated wealth from several centuries coming to Asia at 10, 20, 30, 40, 50% discounts. We really appreciate giving us the mantle of control for the next chapter, the next 2 decades. Thank you very much. We will now start the bidding for gold at $2,500 or $3,000. What are you going to do about it, London and New York? What are you going to do about it? And the challenge is going to be when they reset. You hear this word reset. It's funny. The reset is used as a word without explaining what it is. It's a change of the gold price relative to all the currencies. It's a doubling of the gold price. It's not a change of the Iraq dinar versus dollar. That's only one small part. It's not the Vietnam dong versus the dollar. That's only one very small part. The nucleus of it, the main centerpiece, is changing the gold price to double whatever it was for the stinking, lousy, toxic, worthless paper currencies known as major Forex currencies. The Shanghai Free Trade Zone is going to be the major center, Elijah, because they're going to have, big privileges there in the Shanghai Free Trade Zone. It's going to be minimum customs inspection. It's going to be very, very private banking accounts. No data shared with the corrupt U.S. government through their corrupted FATCA rules. It's not going to be subject to Basel rules for leverage and asset ratios. It's going to have a lot of hundreds of different companies signed up there. It's going to have eventually hundreds of different banks cooperating there. It would be a great place for people who want honest commerce and banking to get their hands in there. But I'm really looking forward to when Shanghai is no longer supplied by their Western agents, because they're going to double the gold price and they're going to triple the silver price. And that will be a fun day, because the challenge will be to the Western bankers. You don't like our $2,500 gold price? You don't like our $50 silver price? Well, then arbitrage it, you corrupt sons of bitches. Arbitrage it. Buy it at your end and sell it at ours. Buy it at your $1,100 gold price and sell it at our $2,500 gold price. Arbitrage it. And they won't be able to, because they don't have any. That's how the COMEX dies. They run out of gold. Chinese change the gold price and dare them to arbitrage it. And they won't be able to because they don't have any.
So when looking at wealth, power, and debt, how do you see Russia and China stacking against the U.S.?
Well, I think this is a very interesting point that's not discussed enough in the Western press. And when you get elements of it covered, it's nothing but propaganda. Let's start with the most important aspects. China has zero external debt. U.S. has $17.5 trillion in debt, and maybe as much as $9 trillion of that foreign held. So the U.S. has, let's just, for argument's sake, it's over 50%, the United States. Over 50% is foreign held debt. So the United States has $9 trillion in debt and China has zero. Which is better? Russia has zero external debt. So which is better? We hear in stories about the Russian sanctions that the Russians are crippled. Their ruble is down 20%. They're receiving much less in the way of energy, oil and gas income because their currency is down. They're getting stressed to their banks. Russia has zero external debt. Which is better off? Wait till the United States has all of its external debt and loses the dollar as the reserve currency. Russia and China are working together to eliminate the usage of the dollar in trade settlements. When that starts to catch with the Europeans and the Saudis, the Gulf nations, you're going to see a lot less usage of the dollar in commerce, and as a result, all those countries are going to get rid of their treasury bonds in their banking system. So who's better off? Russia and China not using the dollar, or the United States that's going to lose their global reserve currency, the dollar, and be forced to make a new scheisse dollar, which is my polite way of saying shit dollar. The shit dollar will be immediately introduced with a 30% devaluation. Now let's go to gold. Fort Knox has not had an audit since the mid-70s. I have a contact whose good friend and from 20 years of coordinated work is a security head at Fort Knox, and he says that it is filled with nerve gas, and it might have some old coins in a couple of barrels. Okay, so it's a nerve gas warehouse. What gold does the United States claim to have in its books? Well, they claim deep storage gold. Deep storage gold is nothing more than, say, Barrick US-based mines for ore that's not been mined and certainly is nowhere near the refining stage. So what does Russia own? I have on good authority been told by someone who actually saw their Kremlin gold vaults in the 1990 decade when doing work in the post-Yeltsin era. He saw 15,000 tons of gold in the Kremlin. And he has assured me that in the last few years, the Chinese have accumulated a tremendous amount of gold to the tune of 1,000 tons per month since March of 2012. That's 30,000 tons there. The Chinese are sitting on somewhere on the order of at least 20,000 tons. So together, Russia and China very conservatively are sitting on 35,000 tons of gold, and the United States has none. So which is better off? Okay, let's move to energy and metal inventory. The United States claims to have a tremendous amount of oil and gas that they're doing with shale and other devices, and very high cost, triple the cost of the Persian Gulf. So that's going to be very vulnerable to this lower price. Does the United States have a huge reserve of oil? Correct me if I'm wrong, but did they not shut off the Gulf of Mexico and its 2,500 oil rig sites? I believe, yes, they did. And that was a project by Halliburton, who exploded the Deepwater Horizon British Petroleum site, murdered 12 people, polluted the entire Gulf of Mexico, and finished it off by pouring Corexit on it as a dispersant. So now in Atlanta, it rains Corexit globs. It does not melt on the lawns. It's junk. I got that directly from Atlanta-based clients, confirmed by Sherry in Tennessee, who's got a radio show. So the United States has no significant energy reserves, while Russia does. Russia is number 1, 2, or 3 in all the following metals for global supply: gold, silver, cobalt, aluminum, tin, zinc, nickel, strontium, vanadium. What's the third? Strontium, vanadium. There's a third structural metal. I can't think of it right now. And the rare earth metals. They're 1, 2, or 3. The United States is nowhere near the top in any of them. So who's stronger, Russia or the United States? Okay, so you get my idea. You get the drift. The U.S. is weak. Russia and China are strong, and that's why the U.S. is trying to isolate Russia from Europe, because Russia and Europe together will form the Eurasian trade zone, joining in with China and create a gigantic trade zone that George Orwell warned against, called Eurasia, whereas the British and the Americans will control Oceania. George Orwell was not a fool. He did not write a fairy tale book. He wrote a prescient book about the future. And, 1984 describes global fascism as taking root. And I'll tell people exactly what device, what medium has enabled it to make so much progress, and that is heroin. Heroin. So it's kept in government control, government hands. Orwell didn't describe heroin as being important. He just knew that global fascism would take root and be inevitable, mainly due to the corruption of the human species. But, Langley is the global monopoly. Langley has the global monopoly on heroin. 1,500 tons a year of heroin are produced in Afghanistan. It's what the war is all about. It was 300 tons before the Americans got there, and it's 1,500 tons, worth somewhere between $800 billion and $1,200 billion a year. And what it buys is a lot of control and bribery of Congress and of other countries, their parliaments, their bankers, and they all sign up for a piece of the narco money that's been propping up the U.S. banks now since, I'd say 10 years ago. So Russia and China are strong, Russia does not have the industry that China does, but neither does the United States. What happened to Detroit? Car industries, it's really on tenterhooks. Detroit's being bought up by China. Entire neighborhoods, multiple blocks are going dark and going dry. No electricity, no water. China is redeeming their treasury bonds by buying up entire neighborhoods in Detroit. So who's strong, United States or Russia and China? The answer is obvious from a metal inventory standpoint, energy standpoint, debt standpoint, whatever.
And I know we talked in our last interview that, with China becoming more powerful, they're even seeming to have, you think, influence in U.S. foreign policy. Now, did you want to discuss a little bit more about their motive behind having this influence?
Well, again, they're propping up Bernie. The U.S. They can actually say to the United States, "Hey, go ahead, do whatever you want in Ukraine, and try to interrupt the Russian flow to Europe because it won't work. Make fools of yourself." Beijing tells Washington, "Go ahead, make fools of yourself with this sanction against Russia because Germany's not going to go along with it. And when Germany doesn't go along with it, the rest of the Europeans are not going to go along with it. Germany is not going to do a suicide pact with the United States just because the United States wants to make a scorched earth, firewall in Ukraine to stop the marriage between Russia and Europe. It's inevitable. So Beijing says, go ahead, do whatever you're going to do." Because immediately afterwards, China got a really good, rosy deal. And the details are not complete, but they got the Russians to come to the table and make concessions that they did not make before the Ukraine war. They call it the Energy Holy Grail deal between Russia and China. It's a 30-year deal. It's like $40 billion in infrastructure development. By that, I mean they're going to invest at least $30 billion in gas pipelines, LNG port facilities, relay stations, railroads, all kinds of things. Processing plants, like for oil, you got to change the oil viscosity, remove contaminants. So China basically said to the Americans, I believe, go ahead, do your sanctions. We won't stop you from making idiots of yourselves. We won't stop you from isolating yourselves because isolating the United States is one of our agenda items. We're going to get a better oil price. And besides, and I mentioned this in the previous interview with you a week ago, the Chinese are going to march in and buy a lot of European agricultural businesses in Portugal, Spain, Italy, France, maybe Greece too. They're going to buy them up. These companies are going to go slowly bankrupt from the counter sanctions by Russia not to buy European agricultural produce and livestock meats. The Russians turned right around. I think they prepared this in the May and June World Cup finals. During the finals, Putin came and visited Brazil, saw the World Cup final, met with Rousseff, I think her name is, the president of Brazil, and I think cut deals with a lot of different nations. And now we have a recent deal with Peru, making a huge deal with Russia. The United States is trying to tell them, no, no, no. And the European Union, no, 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 don't make deals with the Russians. And again, this is going to be the new big phenomenon in Europe and South America. Pay lip service to the U.S. government and do as you damn well please in contradiction of what you promised Washington. You're seeing it with the South Stream gas pipeline that Gazprom owns and is extending to various other places north of Ukraine to reach the European market, in particular Serbia and Hungary, Bulgaria. Those nations are telling the Americans, oh, no, no, we won't proceed. Then the next week they proceed. They take more money from Gazprom. They sign more contracts with the Gazprom CEO. They make more deals with the Kremlin. They make more multiple-sided deals with Russia that include the pipeline. I mean, this is amazing. I think the Chinese are the biggest winners of the Russian sanction lunacy from Washington and Europe. The big losers are going to be these dumbass nations like Latvia and Lithuania. They're going to see a 50% economic decline, a recession of 50%, 50, for their allegiance to Washington. Is it really worth it? One by one, these nations are going to break off, and it's going to start maybe not so much with one by one. Maybe it's going to start with Germany saying, we just cannot follow these sanctions any further. I was told 4 months in advance of Merkel's announced resignation by The Voice, who has connections in Central Europe. I was told 4 months in advance, Merkel is going to resign even though she was just reelected as Chancellor of Germany. That was huge. I thought, wow, that would mean Germany's going to flip into the Russian-German camp and go full throttle into the new BRICS gold currency. That's what I think is going to happen, Elijah.
Right, and I know that we've talked a lot about, this gold-backed currency that you've talked about before, and I was wondering if you could talk a little bit about, just to wrap up, your thoughts on the new gold currency that you see coming. There are a lot of false arguments, you say, about the inadequacy of the gold supply to back global currency. Did you want to talk a little bit about that, and that these arguments don't really hold up?
Yeah, well, we covered on the Shanghai plot. They might have a timetable, but we're not really advised as to what it is. They're going to double the gold price. They're going to challenge the London and New York bankers to arbitrage it, which would, close the gap. If you're able to obtain through buying London gold at 1,100 and sell it in Shanghai at 2,500, you're going to bring about a huge wave, and you will close the gap. That's what arbitrage does. It finds a gap. It could be in lumber in two large locations. It could be in natural gas, two large locations. You try to close the gap with arbitrage. It won't work because London and New York won't have any gold. So that is coming, and when it comes, it's going to bring about a shock to the New York and London gold derivatives market. I haven't talked about this much, but here's roughly how it works. You've got all these derivatives that are fraudulent, basically, that tie together the major currencies. Just think the euro, the dollar, the British pound, the yen, the Swiss franc. Okay, I might leave one out, Japanese yen. I think I said that. Okay, you've got the major 5 currencies that are the IMF basket, by the way. These currencies are all tied to gold. They all keep gold down by establishing a phony low price for gold. All these derivatives are going to blow up and explode. And when they blow up, they're going to kill some banks. They may kill a lot of banks. I was told that we're going to see probably a big Western bank collapse in the next several weeks. I think we got a timetable, and what has been explained to me, this comes from, it mainly comes from The Voice, but he has said that he's hearing it from different locations, different settings, different sources, different places, that the Chinese New Year is going to be lighting the fuse, and that's mid-February. He believes that we're going to see some breakdowns before that as preliminary in anticipation. But after February, late February and March, April, I think we're going to see some very big events. And you hear these arguments, and they're funny. You hear arguments from the clowns in Europe and London and United States that there's not enough gold to go around in order to make a gold standard. There aren't enough ounces to cover all the money. And take a look at the money supply. I've made this argument many times. Since 2009, the US dollar money supply has increased 300 plus percent. So it's 4 times bigger now. Is the gold price 4 times bigger? No, it's going down. That's because it's corrupted. So you're going to see the gold price go up from 4 times what it was back then. 4 times the 17, 18, 1900, 1600, 15, let's just say 1500 times 4, 6,000. So when the money supply for the dollar goes up fourfold, so does the gold price in the target zone. We're talking $6,000 to $7,000 gold price, and there'll be plenty of gold to go around because the currencies, the paper currencies, will go down in value. That's how you address the supposed shortage of gold. Well, gee, there's another side to this too. It's not just that gold will be worth like 7,000. That's my watermark, 7,000 when you get the first stage of resolution. There's another side to this. You could see something like China and Russia announcing that they're going to back. I'm just making something up in order to expose a point. It's called the cover clause. They might say that we're going to back a new BRICS gold currency, but with a cover clause of 5%, which means that if you've got $1 million worth of gold, you can redeem 5% of it to get 50,000. I'm sorry, I got that backwards. If you've got $1 million worth of BRICS currency, you can redeem 5% of that and get $50,000 worth of gold, redemption on demand. So what does that do? Well, it makes it possible to cover 20 times as much currency. Okay, so if you quadruple, fourfold the value of gold, you make it possible to cover 4 times as much of the toxic paper currency out there. If you also impose a 5% cover clause, you can then cover 80 times as much toxic paper currency. So when you get the gold price of 5,000, you're going to get more equilibrium in the market. Supply will be almost equal to the demand. But when you get to 7,000 or 7,500, I think you're going to see close to equilibrium. And here's where the zinger comes in. The zinger comes in. I just had a conversation the last 3 days with The Voice. We don't talk much. We communicate a lot with email on an almost daily basis. I asked him, when it comes to majority, the Swiss allocated gold accounts, but there are also some in Luxembourg, there's some in London, but the majority are Switzerland. I said, when it comes to these bullion banks and their allocated gold accounts, which means, let's just say Mr. Mueller from Germany and his family, they own $160 million worth of gold. Well, they keep it in a bullion bank, and they have a specific list of their serial numbers, the country of origin for the refinery, the stamp, and a weight. It might not be exactly 5 kilograms. It might be 4.98 or 5.02. But this bullion bank account in the Swiss allocated gold accounts would have specific bar lists, so Mr. Mueller and his family, extended family, whatever, can look at it and say, well, we've got 600 different bars or 6,000 different bars. And we know exactly our serial numbers, exactly the Swiss and Russian refineries, exactly their weights, and we'd like to go visit them. Well, the Swiss bankers tell them, no, you can't. You can't, but you can look at some gold. We got a bunch of gold over here. Isn't it shiny? Isn't it pretty? And Mr. Mueller says, yeah, but I want to look at least 20 of my bars and see my serial numbers to be confident that you haven't sold them. And they say, oh, no, we wouldn't do that. That'd be against the law. And look at this pile. Yours is in there. Isn't it pretty? Isn't it shiny? Okay, I asked The Voice, how many tons of allocated gold accounts, how many tons have been appropriated, sold, stolen, and used, replaced by nothing but IOU certificates. They call it rehypothecation. He said, I believe it's at least 30,000 tons, and my best estimate is 50,000 tons. So how do you get equilibrium of supply and demand when these bullion banks have to replace what they stole? That is exactly how you get from 7,000 to 18,000 gold price. It's going to happen in the next several years. It's going to be a happy day, except, we have to be fighting third world in the United States, supply shortages, disorder, police killing citizens, shops being closed, supermarkets being empty. We have to combat that along with viruses. You want to look at the source of viruses? Fort Detrick, Maryland, and the Gates Soros laboratories in Sierra Leone. That's Bill Gates, as in Microsoft Bill Gates, and George Soros, the philanthropists. Gates and Soros, they're Sierra Leone laboratories that developed the Ebola virus. And a funny little side note about the Sierra Leone laboratories, the Red Cross workers that are vaccinating people in Sierra Leone, Ghana, and Liberia are being murdered. The Red Cross workers giving the vaccines are being murdered by the natives now, because the natives have come to the conclusion that the only people who are sick are those receiving the vaccinations.
Well, Jim, Willie, I wanted to really thank you for your time today and being willing to come back for this addendum to our last interview last week. Before we let you go, were there any last thoughts you'd like to add, and where can our viewers find you?
Well, we covered a lot of topics here. I have nothing additional to add, but I encourage people, even if you're not new to this, but go to the goldenjackass.com website. There's a lot of public articles and public interviews that I've done. I make them all available. And fortunately, the hosts make them all available for my followers and my readers, my clients. But if you're new to this, dabble around. Don't be overwhelmed. Just dabble around, find some articles that are of interest, read some of it, and don't be frustrated if you don't understand it all, because this is extremely complicated. The whole concept of phony money is made difficult. The concept of inflation is made difficult. Greenspan tried his best to keep us confused, and he did a very good job. He didn't make me confused. I was laughing at him. So after you've learned some, after you follow some at the Golden Jackass website, sign up for the newsletter. There are 2 reports that are issued every month. One's called the Global Money War Report, because this global financial crisis that began with the Lehman collapse, that was a kill job, by the way. It was a prevention of the Goldman Sachs failure. Goldman Sachs was at the risk of failing, so they killed Lehman in order to rescue Goldman Sachs. The global financial crisis, that they call it now, it will not end. It's a global financial war to protect and defend the dollar. So any nation like Iran, any nation like Russia that wants to use a different currency, not the dollar, they're branded as terrorist nations, rogue nations. Propaganda comes out. Since when is Iran a nuclear threat? I mean, it's nonsense. They don't have a delivery missile system, and I don't think they have adequate refining to make weapon-grade plutonium. It's nonsense. No, the problem is that on a regular and frequent basis for the last several years, Iran has been selling gas and selling oil out of the dollar. They don't want the dollar. They don't want it. And right now, the dollar is being made toxic and contaminated by the quantitative easing. It's unsterilized monetary inflation. All right, so that's the Global Money War Report. And the second report is the Golden Currency Report. The Golden Currency Report is about central banks and policy and demand for coins, and India's policy regarding its imports of gold, and a lot of other things. I try to cover more issues regarding China in the Golden Currency Report. Um, there's a lot of energy issues, petrodollar, all the Saudi concerns. I try to put in the golden currency report because it's such a big topic now, the global money war. Uh, the topics are all over the place. I mean, this whole Russian war, the sanctions with Ukraine, it's all about Russia not wanting to use the dollar anymore. This has been planned for a long time. And a funny little side note, when the Germans announced in 2000 and what was it, 11, that they wanted to repatriate their gold, they did so in response to a briefing by the US government State Department for the plans of the Ukraine war. And the Germans said, "You people are crazy in Washington. Give us our gold back at the New York Fed." And that's when they got the FU, and that's when the German parliament went in for a meeting to locate and inspect their gold at the New York Fed, and they were told FU. And that's when this all heated up. Germany is going to leave the euro. Germany is going to leave NATO. Germany is going to embrace Russia and China with this gold-backed, silver-backed BRICS currency. There are over 170 nations now affiliated with the BRICS, and it's going to grow and grow and grow until you have 90% of the world as participating in the gold standard, except the United States. Third world, that's where we're going. And you see evidence in the interstate highways where the potholes are not being filled. You see it in evidence in the industrial parks that China is accumulating. You see it evident in the Gulf of Mexico, for God's sake, contaminated. You see it evident in Detroit, which is going dark and going dry with electricity shut off and water shut off. Get ready for $7,000 gold followed by $18,000 gold. But the trigger event will be the Chinese with full Russian support, and I believe full Saudi support in doubling the gold price. I think the Saudis are going to work feverishly to replace the gold that was stolen from their allocated accounts in Switzerland. The Saudi gold, the UAE gold, the Oman gold, the Bahrain gold, the Kuwait gold. The Gulf region Emirates are having their gold stolen in Switzerland. That is the bulk of that 30,000 tons. Arab gold. There are law cases, legal cases being filed right now, but watch China, Germany, Russia, and the Gulf Emirates work together and bring about a higher gold price as the Saudis convert their roughly, I think, $1.5 trillion in treasury bonds and bank stocks, convert that US dollar paper into gold. This is how we're going to get from the double of 2,500 to 7,000 to 18,000. I've mapped it out. Watch it happen. I think it's absolutely unavoidable.
This video was brought to you by Reluctant Preppers. Click here to watch Reluctant Preppers' latest interview with Gregory Mannarino. Bet against the debt or lose your cash. Now for a clip from the interview.
They want to keep the mechanism going, and that is nothing but a wealth transfer. Stealing from the middle class is being decimated, absolutely decimated. They don't care about the lower class of people because they got no cash at all. The middle class has the bulk of the money. They're finding every way that they can to redistribute that wealth or steal it from the middle class and push it to the upper echelon of society. We're watching something unfold here. We have been for quite a while. That is absolutely epic and is going on right into people's noses, and that is a creation of a two-tier society. We are not going to have a middle class in a few years. This next crash, which is coming in the equity market, when the debt bubble bursts, in my opinion, we're going to see a crash here that is going to make everyone before it look like child's play.